We are back on MorningLine. Thanks for joining us, talking this morning taxes. Ask the tax expert. That is Doc Friday here.
It's good to have taxes. I do. I love taxes. I mean, nothing else in the world better than taxes.
You're in the right biz. I don't know if most of our viewers agree with that, but maybe you have questions. If you want to join us, 737-7587. Jump in. All right, what else? You have some items here because, like I said, I think a lot of people right now, we may not get a ton of calls because they're in that pickle. Right. But what could have carried over from last year that some of our viewers might be dealing with, aside from, you know, just thinking about what's going to happen with their next tax filing?
Well, I mean, again, it's really, there probably isn't going to be huge changes. The child credit went from $1,000 to $2,000, so that's a great thing that's happened. Not many people probably used it, but if you had a moving, let's say you moved in 2018, now that would have shown up on your W-2. You can no longer deduct your moving cost or relocation cost. So again, the term here, I guess you want to say, is simplification. They're trying to eliminate some of the taxes. I think a big concern, we keep getting calls on, if I give to charity, it's no longer a tax deduction. And I think the misconception in that is always the same. If you itemize, it's a tax deduction. If you don't itemize, it's still a good thing to do, but it doesn't help you tax-wise. Okay, so so if you itemize, and now we have to have $24,000 for a married couple or $12,000 for a single, so you would have to give more money than what you might have had to give in the past to meet your itemizing, right?
Okay, that makes sense.
So in my opinion, you have two options. Every other year, so maybe in January through December this year, we're almost at the end, you give all the money you would give for next year. And this requires cash flow, I understand. Yeah. But then every 1 year you would take the standard, the next year you would itemize because you gave enough money. You can do the same thing with property taxes as long as they don't exceed the $10,000. You can pay, if your property taxes are $2,300, $2,400 a year, you pay it twice because ours is due February, and then again they send it out in November. So we can pay ours in January and December, say, and then the next year you don't pay it. So you pay your property taxes twice, you give your charity twice, so every other year you maximize. But so there are some games you can play, is all I'm saying, with that kind of thing, making sure you understand how the taxes work. Then you can actually play the games. Required minimum distribution. If you're over the age of 70 and a half, one of the things I know a lot of people don't do, Nick, is instead of giving to charity out of their purse, you know, they write the check every week or they comes out of their bank, give from your required minimum distribution. It's zero tax. You don't have to itemize. You don't have to do anything.
Now, explain that now.
So you, if you hit 70 and a half, you have to now start taking required minimum distributions from your IRA, right?
This is only for folks who are over
70 and a half.
Gotcha.
But those individuals are also often very good about giving to their charities and their churches. So give your required minimum distribution directly from your RMD to the church. You never touch it, or to any charity. You can do 20 charities. And then it's 100% tax deduction for you. So you don't care if you itemize. So you can still take the standard deduction, get the charitable contribution, and it zeroes itself out. It's a wonderful way of giving, especially for people that are older that most of the time don't itemize anyways. So, I mean, there are some fun games you can play if you understand the tax laws.
It's interesting what you said about it's just a good idea to give. Whenever I've given, and I don't give, I wish I could give more, but what I do give, I'm never thinking about taxes when I do it. Heck, there have been times I've given stuff and I haven't gotten any proof of it. I forgot to get the receipt or whatever.
I know.
And that the bottom line is I don't give
for a tax deduction.
Now I know some people maybe, when they give huge amounts, are doing that with that in mind.
Well, yes, I've had some clients that have given $1 million, okay, because it was a tax advantage, and that can roll over for a number of years. So I understand there are advantages, antiques that maybe is worth more in an appraisal than it would be to sell it. The appraisal value is what you would get for the contribution. If you sell it and you have to pay capital gains and things on it, it may not be a tax advantage. It might do better by by giving it to charity. So we do, but again, understanding the tax code gives you the ability to have some fun with how you're going to actually save tax dollars and give at the same time if that's your one.
No, and that's great. And I didn't mean to say that I don't want to take advantage of it. It's just I remember it after the fact. I say, oh, I get a tax break.
I'm actually the exact same way because
and I say, oh, okay,
I don't think about it.
Yeah, you don't. But then later I'll take advantage of it if I remember it and I have proof. All right, let's go to Jewel. Jewel, good morning.
Top of the morning, my friend.
How are you, Jewel?
Hunky-dory, hunky-dory. Doing okay?
Yeah, we're doing well.
And it was your birthday yesterday, is that right?
Yes, it was.
Happy birthday,
Thank
Nick.
you. Yeah, it was my birthday. Thank you, Jewel.
Indeed, happy birthday to you, Fred.
Thank you.
Thank you for having that beautiful lady on there. I watch you often there, Dr. Friday. Looky here, I got a couple of Ansel Adams prints, and if I could sell them for a pretty penny, I probably would. But I'm scared it might mess with my SSI or Social Security, so I just soon watch them on the wall as to lose out on what I have, as small though it may be, a steady income, if you will. I know y'all touched on that a little bit. And what if a fella was to hit the lottery, excuse me, for a buku bucks? Would he lose out on his Social Security and SSI and such as that?
How old are you,
play
sir?
the lottery. I'm just curious.
How old are you, sir?
Have a beautiful day.
Okay, hold on, Jewel. How old are you, Jewel?
If I get to live to the 20th of December, I'll be 74 years old, my friend.
Awesome. Okay.
Congratulations.
Yeah, thanks for your call.
So in answer to his question, there's a couple things. I don't know the value of those pictures, but there is a 0% capital gains tax. So theoretically, let's say he makes $50,000 on the sale of those, he may have a zero tax. So he may not have any problem with it, or a very minimal. His Social Security tax could fall into getting taxed slightly that year, but I would never not do something just not to pay taxes. He would not lose any of his benefits because he's over the age of retirement.
That goes nowhere. That's locked and loaded.
If he was under the full retirement age, he may actually have to pay back some of his Social Security benefits in the year that happens, but it would go back to the next year to what he had. So I would wait till full retirement as he has, and now I would find out the value of that, and then I would then worry about the taxes.
Yeah.
I mean, I don't think I'd ever live, if I had the ability to get a little nest egg going or something, or win the lottery, I wouldn't stop playing the lottery just because I might have to pay taxes.
Yeah.
So yeah, I would just go enjoy life, do what you like to do. If there's a tax element to it, there are many ways we can work around those. Or again, he's one of those that could donate the value of that picture. He sells one, he donates the other. It could wash it out and save hundreds of thousands of dollars. There's a lot of options out there for him.
Didn't get to press him on what kind of prints they are. I mean, are they original prints or whatever? Because if it is an Ansel Adams, depending on what type, it can be a lot of money. So just so I'm clear, so there is no capital gains tax?
There is a zero for people that are in the 12% or less.
Okay.
Or 15%.
Right, now, if you sell your house.
Now you've got the exclusion of $250,000 for a single person or $500,000 for a married couple.
So if a married couple sells their house for $450,000, then.
And then they would also have, so they paid $200, and then they sell it for $700, they would still have an exclusion for that $500. So they could do that.
Interesting. Wow, that's cool. All right, let's go to Amanda. Amanda, good morning.
Good morning.
Hey.
My question is medical
deductions.
Medical deductions, yes. Your premiums, your deductibles, and then your co-pays. Last year we spent over $35,000, my husband and I, just in medical. So I see that will be happening again this year because of how the way the insurance companies are going. So my question is, can we still itemize those?
You can. It's just going to be difficult because you have to beat the $24,000, which I'm kind of hoping you have a mortgage and property tax and sales tax that will come into play that will help you. Plus, it's 10% of your adjusted gross income. So you're not going to get all $35,000. They're going to take the first 10% of your income. So if you make $100,000, the first $10,000 is going to come off. So you'd only have $20,000 or $25,000 to go forward with. You'd sound like you'd still be itemizing. This is a time to maximize other deductions, charity, or whatever else you might have. But in answer to your question, it will probably kick in your situation unless your income is, $200,000 or more, and then it may not because your income's too high. It will zero out the 10%.
How did it work for you last year?
Last year we were able to itemize, and for the first time ever, actually, we got a refund.
Oh.
Yeah, well, this year it'll be a little harder because last year you still had the standard deduction at $12,000 some dollars. Now it's $24,000, so it's going to be a little different. But it should come out in the wash. Theoretically, you'll get just as much one way, but you're going to lose. Do you have children?
No, we do not.
So you're going to lose that $8,200 of personal exemption. So it's, you know, again, you're a prime example of if you itemize that personal exemption at the 15% mark, you know, is going to cut your deductions down a bit. So I would probably prepare for the worst and live for the best, in a sense, or whatever the proper term is there. So just be prepared that you may not be able to take off as much, or maybe not get as much of a refund this year as you did last year.
Excellent. Well, thank you very much.
Thank you.
Thank you for your call. That was a great call. I want to ask you more questions about the medical exemptions after the break, but I'm just curious, who is it? Is there one dude, one woman in D.C. that rewrote this, that came up with, yes, let's do this with this deduction, let's do that?
It's Donald Trump. Did you see his tweets?
I know politics. I know politicians are the ones that drive it, but who is the one that does the nuts and bolts rewriting of the actual code? Have you ever met any of those guys?
I have never met those guys.
They got to be, and it could be women, they've got to be very smart and kind of the kind that just sit there and numbers.
I'm assuming they're attorneys, because they have to understand how the law affects the taxpayer and how they're going to fight it, right? So they have to get the justification behind the verbiage for the IRCs.
It's like a game of chess almost, thinking ahead about, okay, we're going to do this, what's going to come down the pike, and think about what they do and what they end up writing and doing affects every single American.
Millions of people.
Even those that don't pay, because it affects someone they know.
Absolutely.
It's incredible. Listen, we'll take a break on that note. The number is 737-7587. Questions or comments? We just had a couple of really good ones. She's really good at answering them. We'll be back with more on taxes right after this.